Hey folks, welcome to Pro Trader Strategies. We're an educational company where we're going to teach folks like you about options and the markets. So if you want to learn about options trading, then hit that subscribe button right there at the bottom there. That way you'll get notifications when we are shooting these videos. I also do webinars on Thursdays right after the close, so please check those out. You'll get notifications if you hit that subscribe button. Also, throughout these videos, comment over there at the side because I want to make sure you're clear a concept before I move on. So if there's any questions, comments, or anything else, put them over there and we'll try and cover those during the video. And if you're watching this on tape delay, I will circle back around for you folks and make sure I got all your questions answered. And finally, smash that like button because it really does help us out with these videos. Finally, in this video, we're going to talk about the economic data, the geopolitical environment, and then how that all comes in to impact some of the markets with some of my market analysis. We'll talk about technical and the physical as well. Also, my name's Eric Wilkinson. You very well may recognize me as the Wolfman from mainstream media, and I'm going to teach you guys some options. So let's get on with it. Across the pond, not really any economic data. Tomorrow's the day that we're really going to be looking for economic data across the pond that comes in the form of the flash manufacturing PMI numbers. Now remember, those are purchasing managers. We also get the service sector, but we are going to be really particularly interested in French and German purchasing managers index for the manufacturing sector. So all of that stuff comes out. But here in the United States, we did get some economic data, and that was in the form of Richmond Fed manufacturing coming in at 22, expected to be 18. So better than expected there. Obviously a good thing. We've been seeing a mixed bag with these, the last round with these indexes, where we were getting some of them showing a little bit of weakness. Right now, so far, we've seen most of these numbers come out at least in line or slightly above expectations. That leads us to believe that our PMI numbers for the manufacturing sector will be pretty good here, at least in the United States, not necessarily across the pond. And then finally, we got the existing home sales here in the United States coming in at 5,800,000, expected to be 5,710,000. So a little bit better than expected there. We've seen a mixed bag with that last month, right? Good to see that these higher interest rates aren't really keeping people off. We're probably seeing some of these lumber prices come off a little bit for the new homes as well. So this is existing. It's not necessarily going to affect that, but we're seeing a lot of these commodity prices really come off of those highs that we were seeing as of recently. And then we got Powell testifying in front of the House and Daly speaking, Fed governors throughout this week. After the FOMC meeting, people, they can't wait to talk. And that's what we're going to start seeing here across the board with these FOMC members. All right, so across the pond, let's talk about crude oil. We made another all-time high here again today. Yesterday was just a blast off to the upside. Making a new high again. These are 52-week highs. A lot of people talking about crude oil going to $100 a barrel. That's with us pulling back on our production here in the United States and demand starting to rally. So some people are calling for that. That's not necessarily what we want to see, folks, right now in this coming out of this lull in the economy. We don't want to see the prices of crude oil spiking higher because that slows velocity of money. And velocity of money is when I spend $5 with, say, for instance, you're going to spend that $5 somewhere else. But if we all are spending our money in gasoline, that extra $20 a week, all right, $80 a month, or almost $800 or $1,000 a year is being spent somewhere else, right? That would create a lot more velocity of money if you and I had $1,000 a year spending it in different ways. $20 a week doesn't seem like that much, but when that velocity of money is spent between smaller retailers or between folks like you and I, that money gets spent within the economy and it really starts creating some velocity there. And that's what we would like to see. And crude oil has a tendency to really suck up that extra money that you and I all have, that we could go out and buy a Starbucks, or you go out and get In-N-Out Burger or something like that. We will spend that money differently than when we're all putting it into our tanks. And then we're seeing gold futures come off a little bit. Listen, folks, the cryptocurrency sector is having some difficulty. Yes, we're seeing Bitcoin make a move back, but Doge and a couple of these other ones that aren't probably, they don't have the backing like what I would see with something like Bitcoin. We know that there is a finite amount of this. There's a supply and demand aspect to Bitcoin, which allows me to believe in it as a store of value. As long as there's a limited supply. When we're looking at Dogecoin, folks, that's just basically an NFT that you can buy, and that's what you're willing to pay for it because they can pump out as many of those as they want. And then there's a couple other ones that are tied specifically to the dollar. Now, to me, that doesn't make sense either because if it fluctuates with the dollar, why not just own the dollar? That doesn't make sense for me. All right, but Bitcoin making a move back here, finding a little bit of a bottom. If we can stay above basically 30,400 would be something that I would be looking for. That is going to be a massive win for the bulls in this case because we are seeing the slide continuing to see lower lows here, but we are at an area of support in Bitcoin. So I would take on that if I were looking for a bullish move in Bitcoin. That would be an opportunity with limited risk to the downside. You could pick today's bottom as your out for a swing type trade. And bonds are coming off, albeit only slightly, pretty much unchanged on the day. VIX coming off, well, that would lead one to believe that we would see that the equities were selling off, but no. Big rotation again. It looked like just yesterday the tech sector was going to be in at least a shorter term, a little bit longer short term bearish correction here, but we didn't get that yesterday. A lot of tech sector was looking pretty weak, and when I was looking at a Netflix, Square, all of those guys making some turnarounds today to the upside. And the Dow Jones Industrial Average, although it's a red candle, we are up on the day by only about 30 points. As yesterday, engulfing pattern to the upside in the Dow Jones and in the E-mini S&Ps. This is an engulfing pattern, bullish. That is very bullish. Complete retracement of yesterday or the previous day. We are looking for newer highs here in the E-mini S&Ps if you are on my camp. Risk is to the upside across the board, folks, in the equities, unless we were to finish probably close to the very lows of the day, which I don't really foresee at this point. I think the risk is going to be the upside. I would say we might come back down and test this point of control right around in the E-mini S&Ps at around 4,200. That would then give us a little bit of move to the upside if we can hold on to that support area there. And a couple of other things I wanted to talk about. Toyota Motors, if you guys remember, I had on some short calls in here. You can see that this market is positive on the day. Yes, it does look like a red candle at the top of here, a bullish or a bearish type swing setup. Maybe not necessarily saying that, but what I'm talking about with this trade is the movement that we got yesterday, that rally, and then with that, sorry folks, paired with my options position. If you guys remember, I'm in the July and I'm short the 195 calls in there, and I've gotten the market to move down and away during the course of this option trade. The problem I got with this was we got some volatility expanding when I got the directional move in my favor. So they were pretty much offset. Yesterday, I got the move against me, moving higher, but volatility, you can see, really came out of this underlying. That's what's allowed me to stay in this game with this move the last 2 days. We've gotten these positive bumps yesterday, and then today we are still positive. But with that said, during that time, I've gotten volatility to come out, right? So I've gotten the directional move in my favor. I had volatility expanding. That hurt a little bit, but now we're seeing that directional move against me, but the volatility is helping me out. So I'm not always necessarily right on my directional moves here, folks. But what I do is I set these up so that we are in a situation where the levers and pulleys are working for us. I sold some calls, right? And I'm doing that in a month where that theta decay is really ramping up. So the thief in the night that comes and steals my premium is helping me out. I sold high to help buy low. And as volatility comes out, we see those premiums go down as well. So despite the fact that the market is moving higher in a bullish move, I've gotten this bearish move in the implied volatility, and that has allowed me to stay in this game and work this trade out so that it is actually really doing well today. So I'm working to try and get out of this trade that I sold in Toyota. I sold it for $1.40 on those July 195 calls. I'm trying to get out for 25 cents. Last I saw it was trading right around 40. So I'm a little bit of ways away right now, but some of that theta decay, if I get a little bit of a pullback, but mostly seeing this volatility, if I can really get this volatility continuing to come out like we're starting to see now, that will allow me to get out of this trade. 1 percentage point down in volatility from where I am right now. So from 22, 23, let's call it, to 22, I'll be able to get out of this trade just by that downtick in the volatility. And then the other one that I was looking at, I'm trying to get out of is not DIA, Kroger. Kroger on this one, I'm trying to get out for about 10 cents. Again, went in there, sold some puts. Volatility is coming out. I've gotten the directional move in my favor. So all of the levers and pulleys on this one is working out in my favor. Got that confirmation, looking for a move to the upside and volatility to come out. So that's why we set it up that way. When I'm selling options, I want that high volatility to come out. I also want to be in an option contract where that theta is really aggressive. And that's why I'm picking those shorter duration in these underlyings. And then, sorry, that was supposed to be a Kroger trade over there. And I don't want that. I want this. All right, so Kroger, let's take a look at it real quick before I get moving on. Kroger making that move to the upside, as you can see, shorts and puts. That move to the upside, volatility coming out is helping. And then DraftKings, I'm keeping an eye on because if you guys remember in my IRA, I have on PIN, so I'm watching the casino sector for that trade. But I also, in my trading account, I have on DraftKings. I don't have on PIN, unfortunately, in my trading account because that's a stock. I usually just trade options over here. And with that said, I have on the July short 40 puts in there. I sold them for $1.20. They're trading around 40 cents as well. Trying to get out for about 25 cents on that one as well. So working orders to get out of these. That's what we're trying to do. Stay mechanical with these. If something happens while I flip the page, I want to make sure that I've got those working orders when they're this close, just for that opportunity to get out. And that's about all I've got for you guys. Like I said, please hit that subscribe button so that you guys get notifications. We're here to educate you guys on how to trade and implement options in and around any given assumption. And comment over there at the side because I want to make sure you folks are clear of concept. Or if you want me to even cover something, a certain stock, take a look at it. I'll be happy to do some technical analysis around there. So throw that over there. And finally, hope you guys all enjoyed this. And if you would, please smash that or take that. Bye for now. Take care. And take it easy. Yeah.